Mic check and screen share check, please. All right, good night. This is the Nightly Strategy Podcast for June 8th, 2022. Let's start off with the sniper trades of the day and the most important symbol, most important stock in the world, Tesla. Using that standard $6 risk box, the blue box is half of that, about $3 for the R10. What would we call that entry? Yep, I would say caught a 2. Agree. And then right after the entry, if we just take our template, drop him on there, somewhere by this price level up in here on the way up, we should be thinking about moving that stop somewhere up into here, take half the bar. As it first departed, we might have just said, hey, let's lock that in. By the time it runs to the top of that bar, this is on 5-minute charts, I think I want to be at least there. Check or hold. I mean, because now you've locked in about 1R right there. You will have noticed that we elected to, we wouldn't even take a full 1R loss on this one because we've anchored to the bottom of the dragon there. Instead of taking the full 1R loss, I would just go like right there. So let me just check my own oil on that. There's my template for my entry. Yeah, I could even argue that you might want to even raise it up a little bit if you say lock in 1R, just for round numbers. I wouldn't be offended by that. So we would call that minimizing the open risk. I could also see, locking in, the half. So you could make your decision. Where would you go, 1, 2, or 3? Or higher, you could go higher. Nothing says you have to stay with that. If you were at 3, you might have been hit. If you were at 2 and you saw it drop into 3, you might have decided to take that anyway. So if you had taken 3, then in my view, you probably need to be looking at a re-entry like right about there, when it makes a higher low and then exceeds the previous one's high, or the previous one's close. Or you might go there as when it makes an intraday high. If you were at 2, you're good to go, and you're probably at this point raising your stop to here if you were at 2. And even if you re-entered at one of those green bars, you're probably locking it in here. And then on this one, you're probably locking that in. Check or hold. Because by this time we've got, if you had chosen 2, now you've locked in 2R. Something like that. You might now be locking in something like that. You might have taken it halfway down the stack if you were, if you took that much, you wouldn't be upset because you'd locked in about 2.5. But if you're still managing the position, you might be at that red line. If you were just locking in 2, you're still in. If you had gotten out here, you might very well have added this position back in here or here at the high of the day. If you're just tracking, if you re-enter at any one of those, that red dot is a no-lose plus dinner for 2. It's half a risk box off the top. So you have a pretty nice trade in a variety of ways through here. You at least, you probably have something like that. You could live with that, like 3 little trades, or maybe you took 2. If you had a relaxed entry on 2, you might have gotten this. You might have gotten this whole trade. You might have gotten that whole trade. So you should be holding at least 2R from the Tesla trade. Sniper trade of the day. Devon Energy we profiled yesterday because of that amazing Z-score on the 5-day and the 1-day. So this one is, what would we call this? What would we call this entry here? This is right from the opening. I got to make that stamp smaller. It's almost scaring me. Yeah, I'd call that collapsing dragon all day. Standard risk box for the R10. And then the half a risk boxes, the blue box. So I've taken to that, adding that right after the entry in order to calibrate the money management. I'm sorry, this one immediately breaks to our advantage too. So by the time by the time it gets past the blue box as it is failing, you're probably moving your stop to take half, something like that. When it gets down, if you take half the bar, you get this. When the price breaks to a new low, you probably move your stop down to here so that it doesn't rebound. On this one, I'm not offended if you just take that one, or you keep that stop. You keep that stop there. That's your call. By this time, let's counter up. We have about one, not quite 2R in hand, but it's feeling pretty good. So the that lower red line locks in 1. That feels appropriate. Your call. You can see the VWAP coming up here. So this thing is going to be at a decision point here pretty soon. That all the run up that caused the price and the dragon to be so high, that pulled so far away from the PSAR, that thing has just about run its course. The abnormal gains have been about all retraced. So that's basically, this rising PSAR tells you where the rational fair value is. That's the one where everybody who was still long, that's when they decide if they're going to get out of this thing or not. So that's one reason to consider, bringing this down a little more. All right, so let's see what we got here. One more. Yeah, this is one I would be plenty happy to take. Like right there. Nothing wrong with that. To lock in one. This one, if you stick it out a little further, you get about 1.5 R to get out at this price here. So that's the sniper trade of the day in Devon Energy. Looks like we might have some more on this one. Yeah, so I tried a rebound on this one, or a re-entry. But it almost immediately reversed back up, so I took the scratch. That's my new little stamp right there for a quick scratch trade. Almost like a no trade. An empty oyster shell. A non-winning lottery ticket. A free lottery ticket. It continues to resume. So what would we call this trade here? What's our pattern on this one? Yep, SSC. And again, on this one, I would be happy to take the, the execution stop, like right here below the elbow there of the dragon. So I'm not going to take a full 1 hour loss, which would be down here at the standard risk box. I could argue that by this time you might also already just go ahead and put your no lose plus dinner for 2 in. Get your risk out of it. Why not? Your call. Now that feels smart. You might lock that in. And the reason is that this is now approaching the descending PSAR. So now this is coming into a critical state. This is the price where it could hesitate in the same way that it hesitated down here on the way up, remember? So we had the rising PSAR, met the declining price, and then it pretty much went sideways, and that was the turning point. While that was happening, the PSAR flipped, and now we got the declining PSAR meeting the rising price. So it would not surprise me for this thing to stabilize right here and go sideways. So the first tradable move feels like it's in. And when we look at our little template over here, with the upper red line there, we've locked in about half. And so now we're going to see what happens with price as it approaches the PSAR. Check or hold? Nothing wrong with locking in half. So we might have gotten this one. And you could decide if you like that trade or not. Do you like that trade? Essentially, do you want half an hour? So we have choices. If you had gotten out of that trade, you're probably wanting to resume, like right in here, almost in the style of a Kata 2, after you locked in half. And then that probably would have scratched. So whether you take the early first exit to lock in half and are just content, or you gave it a little more wiggle room, you probably still get basically about half an hour off that trade. Put our little template on this thing. Maybe 0.7. Check or hold. This is one where I play this as a, let me clean up some of this mess. All right, so now I'm short at the red dot, and I see this as what kind of trade pattern would we call this one? Kata 2. Good dog. It reversed immediately, so it was like, well, nothing to see here, folks. So now I kind of look at this argument here. So I got that lower low over here at the last zeroed out trade. Now, if this thing gets above the dragon, pardon me, I can now start thinking about this as like a potential K2 to the upside. So if that, oops, if that dragon holds inside here and goes up through the green line, then I could think of that as a kata 2. And then what I'm doing is thinking about, can it get up here to close the gap? And if I just count if that's my risk, I can go 1, 2, 3 little doggies to the top. So there's a 3-to-1 simply on a return to yesterday's close. Check or hold? Sure enough, it does that. Let's get that good dog out of the way. Now, in this case, what I'm doing is, again, I'm going to execute my stop at the belly of the dragon instead of taking like the full 1R loss. I would just execute at the belly of the dragon. I could even argue at the PSAR if you wanted. You wouldn't have to fight me too hard. But in either case, I'm taking either like a 0.3 or a 0.5 loss on this continuation. Okay? By this time, the price is closed outside of the blue box, so I can raise my stop to the above my entry to the red line. And now it's just management, locking in pieces, and you might take that stop. I leave it to your discretion. Do you take that entry? Do you hold out for more? But the worst you should ever do on that one is this trade. All right. So if we're counting this one up, we get a winning trade here. We get this winning trade. We have this scratch trade here that didn't pan out, and we have this scratch trade here. So that's a pretty good day in Devon Energy. Check or hold? Okay. Alcoa. I've got a right from the opening, so the metals have been on fire. So this is another one of those where it runs up immediately to the top of the box. We get the entry here, have standard risk box here. It runs all the way up in the first bar. It starts to decline, so I hang the blue box. Could have gotten out here to lock in about half an hour because I had a belief in the metals. I ended up just taking the no lose plus dinner for 2. It continued to fail below the dragon, so now I'm short. And what would we call that entry? CD. New low of the day after a rejection of the highs. Feels natural. It doesn't really fall out of the blue box. Starts coming back up, so I take my little fractional win, and just happy to do so. So I get 2 fractional gains on this one. The failure continues. So that's a re-entry to the downside. You know, I'm following the PSAR down, following the dragon down, you know, all of that stuff. Everything feels down. Okay. Standard exit on about half an hour. Checker hold. This is a reasonable place to take that exit. You can see how the opportunity that was being expressed here in the MACD closed off. So that little, like almost like a morning hook, if you will. Hey, that's a move. Just note in terms of scale. That's a move from 66 near the high down to 63.50. That's almost a 4% intraday move from the high to the low of the day. You know, that, you know, unusual behavior in a metal industrial company. I feel like I missed the SSC, but other fish to fry. So we'll take, let's see what we got on this one. We got got this little fractional win, got that fractional win, kind of got that fractional win. So that nets out to about an R on just grinding. So do you want an R? If you do, sometimes you just got to grind. Good running game. Here's Cliff Natural Resources. This is right at the opening also. So the metals, you know, I was interested in. That's the opening. I had noticed this little belly of the dragon, and I'm noticing the top level of the dragon, wondering to see what it would do. If it falls below that red line, you know, it's a collapsing dragon. So I play it gapped open down to here, runs up to the edge of the dragon into this congestion zone, and then immediately starts failing. So I buy it, or I'm sorry, I sell it here with a standard risk box to the PSAR of about 30 cents. You see I've got the blue box for half the risk box calibrated there. Moves in my favor. Goes down a second leg. Hang the blue box from the bottom or stack it from the bottom. Then take the, give back a blue box and exit as it crosses the dragon, hits the PSAR, checker hold. That one's about, you know, if we calibrate that thing is about maybe 1.5. Take 1.5. Happy to do it. Cliff. Next one up, Brazil. From the opening. felt like I missed that one. This was a span of control issue. But that was, if I had taken that trade, what would you call that one? Probably something like that. Then if you're playing strict, you might have said, hey, I'm willing to take it. I'm willing to give it that much off my standard risk, but certainly not more than that. If you were going to stick around for the full R loss, to take the 1R. So this gets to my point about the 1R loss represents the worst possible exit that you should take on that trade. There's at least 2 other exits that allow you to logically get out of the trade because the hypothesis of the trade has failed. Like if you had taken that trade, it's because you think this is going to break out and it's going to exceed the previous peak of the RL270, and it's showing some evidence that it might actually want to do that, right? If we just clean that out a little bit. This is where it would have to get above that price for this really to be that positive hypothesis. And then it could go a range stat from the low of the day. It could go from here, a couple bucks to the upside. But if it starts moving against me, you could argue that breaking through the bottom of the dragon would give you a collapsing dragon exit, and you might even play that short, or it might go further and fail through the PSAR, which would give you a collapsing dragon exit, a reason to get out of the trade. So just because you marked off a 1R loss doesn't mean that your rules require you to stick around and to keep believing in it. You've already seen 3 pieces of evidence that this trade is not working. The first piece of evidence would be failure to follow through and break above the resistance of the top of the PSAR. That's one piece of evidence. It hasn't done that yet. If it falls below the dragon, that's the second. That's the third piece of evidence. So there's already 3 pieces of evidence that would get you out of that trade before you take a 1R loss. So the 1R loss is not something that you are committed to experiencing. You should experience the emotional loss of a full 1R every time you put the trade on. Check or hold? Now, almost shortly thereafter, we actually get those events. So you might have gotten out at a scratch on a violation of the dragon or the belly of the dragon, or by now the PSAR would have gotten you out here. The belly of the dragon might have gotten you out there. Or you could have stuck around and take the full 1R loss. Plus, if you triggered on that and you get slippage, it might be more than a 1R loss, and we don't want that. And now, what should I be thinking of here? One of those. And the yellow box kind of gives me my my standard my standard work, if I had triggered on the PSAR, then I could get short at that yellow dot, and then maybe I would trigger off the top of the dragon, right? So I might have used that kind of a model. Well, as long as I'm seeing patterns, Ed, I'll keep trading it. If time, will, pattern, and money. I got to have those four things. If I have those four things, I can stay with it. Come on, dummy. Wondering where I was on this trade. I was busy on all the other ones with span of control. But now I'm finally able to take that trade. So just because you didn't take them doesn't mean they weren't there. But now I can look at this and say, well, here's my standard, there's my little risk. Standard workbox. Can you see I got something like this going on? Sort of an R10 sideways quiet channel kind of a gizmo. And then it's breaking through the bottom of the PSAR. What might we call that play right there? Good doggy. And I'm going to execute at the top of the dragon. I think of that one as a K2 because I have this, I have this, and then if this holds, that whole thing holds, then this is one of those, right? And I'm noticing that the shape of the MACD is suggesting there might be some downward potential here, something like that. And then the last time that it did this, it went from here to there. So that could be the size of the next leg, right? So I'm just going to clone that and say, if history just repeats, I might see a move that goes that far down that fast. Check or hold. So I can just say this is what the expected time frame of that trade might look like. Little triangle of little triangle template, the carpenter's triangle. That would be simply this trade, right? But now expressed in time that far over. And this big yellow box now would, in theory, act like resistance. It tried to act as support, but there was no follow-through. And then, so this thing was just kind of relentlessly failing. Gives me 2 full boxes down, or 2 half risk boxes, so a full 1R in hand right there. So I lock in After the first box is completed, lock that one in. It goes another one, lock that one in. So I've got almost 1 hour locked in on this thing. Check or hold. And then you're not going to lose money on that. I'm not sure what it did. But the point is how to frame these trades when we're grinding. Now, notice the whole day was kind of a grind. You know, there was that initial run-up on the first trade in Tesla, but there's no other runaway maniac moves as this market is in this bottoming process and sorting things out. All right, so here's another one in Brazil later on. We already played one in Brazil. Here's a second one. So there's the collapse CD. Cash, a minor victory. It's the grind, it's the grind, it's the grind. And then that was the same one. So if you had actually taken that first trade that we worked, it might have been like this, where you get this micro trade. I really just consider that kind of a nothing. It didn't lose money, but it didn't make any money. In the long run, that pays for some commissions. You might have traded inside this little range. The net would have been nothing. I tried that one. It was really nothing. So just keep firing, opening oyster shells and opening free lottery tickets, and then that's the one that pays off for a grinding one. Okay? So those are the sniper trades of the day. Today we had the 5-day trading range is still very narrow. That's this box. Still narrow. Everything is north of the Bollinger Band mean. The 1-day range is still also very small. Price sold off from here net to here net. It's still above the Bollinger Band mean. It's now penetrated the dragon a little bit. I'm starting to get concerned because now we've had some declining lows, but I had a rising high. So this is a market that is even more coming into that critical state, just like we mapped out yesterday. There was just no follow through in any direction. So when the market's hardly moving, that sets up for a grinding kind of a day, and that's the kind of trades that you saw in the sniper trades of the day. On the positive tip, you still got the PSAR is working its way north. The Bollinger Band mean is sloping down, but it's starting to level off a little bit here. If you take a look at the slope of that, it's starting to almost flatten out off this low. And here's our PSAR flip. So this is still cautiously optimistic. One more day of failure to fail, but also one more day of failure to follow through. So this is starting to get a little agitated. Like, what's it going to do? Fish or cut bait? I'm reminded that we're still in bear normal, so we're not in any hurry. Alrighty, so we have the S&P was down 1.09 today. The Russell was the worst. It was off 1.55. Treasuries were off 0.9. Diamonds were off 0.84. The Qs were off 0.72. Emerging markets, the only one of the indexes in the green that was up 0.54. So this was a rotation to the internationals. Okay. Let's take a look at the things that were worse. Starts off with the blended large cap, crypto, tech, wheat and precious metals. We spent some time yesterday talking about PayPal. It pulled back to 87. So disappointing there. Um, Staples, Global Future of Finance, balked crypto infrastructure off 1.4. Then another big cluster of sad sectors: finance, lumber, materials, the other lumber, Brazil 2.25, Russell 2.3, or I'm sorry, real estate 2.3, Ethereum down 3%, Bitcoin futures 3.16, marijuana, Robinhood, Simon Property Group, the commercial real estate down almost 4%. The metals weak today, 5% and almost 6% in Alcoa and U.S. Steel, and Cliff down 6%. So the entire metals complex really got smashed, which makes me hungry to trade them on their rebound or to continue to trade them on their failures. So they were so exceptional that you can bet that little cluster is on my radar for tomorrow. And these are the this is their R10s. You know how much room for the intraday box for their R10s. U.S. Steel is the one that has squeezed the most, 1.7. None of them are especially attractive on a swing basis, so those are really just intraday opportunities. So U.S. Steel is probably the most interesting because it has the best swing reward to risk, and it has the best squeeze at 1.7 to 1. Okay. All right. So back to the upside. Things that were better than the S&P today. For sectors, we had so there's the S&P -1. Consumer discretionary and clean energy -0.56. Mexico and the Aussie dollar 0.4 and 0.15. Energy was up 0.22. Agriculture up 0.32. VIX 0.6. I missed XBI again. Blended commodities up 0.89. Then at the top of the stack, the FANGs 1.8, oil 2.17, ARC Genomics and ARC Innovation 2.3, 2.7. Tesla up 1.25% to close at 725.60. So that initial run up, which went all the way to 760, remember this one, right? Or 750, I should say. It came all the way from, 720 to 750. So that's plus $30. How much of a range stat is that? Is that an unusual move from 720 to 750? A $30 move intraday? In terms of abnormality, how abnormal is that? Not at all. Not at all. Tesla's R10 is $7, which means its range stat is $70. So Tesla, from belly to peak, was only $30 out of a maximum reasonable intraday move of 70. So that was absolutely a moderate to quiet move in Tesla. Nothing unusual to see there. Other targets, Rivian was up 0.27, Squarespace and Devon Energy, Apple and Coinbase off a half. Other things other individual targets that were better. Microsoft and Lithium 0.7, 0.8, blockchain and XOP. So there was not a lot of runaway upside here today at all. It was a grinding day altogether. You could say at some point the bears are full and are not in any burning urgency to drive this lower, but the bulls are not falling all over themselves to try and buy this market. So this is actually a healthy bottoming process that we're seeing. Now we're Wednesday into this week. We'll take a quick look at the reports now. Sniper trade of the day, market health check, and dashboard number one. Still bearish normal. How far away, here's a quick quiz, how far away from sideways markets are we right now? Because the next move out of this, if it heals, the next thing we would see is sideways normal. How far are we away from that? About 5%. Yeah, 5.24%. The risk Z, still abnormally favorable for risk on, so it's telling us that there's an upside move in there. And in fact, Latin America, and so by derivation, Brazil and Mexico should be on our short list to watch, have now moved back above their 200-day moving average. Yeah, it looks ready to go. And that's good for both channeling and overreaction. Both of those mechanical swing systems on the long side are looking favorably at Latin America and Brazil. Tons of dojis today. So not surprisingly, we see a few auto framers test out. There's a 5DD in Disney, 5DD in Home Depot. Those are candidates for 5-day down failure. So what does that look like? And the reason we like that in a bear market is that if everything just goes south, what we have is so you have, if that was a close, this is 1 day down, two lower closes, 3, 4, and 5. So what we do, that's such an exaggerated move that we put a little mechanical wrist box around that. And then, knowing that we are in bearish normal, if that price gets violated tomorrow, what would we do there? Collapsing dragon. And we would call that technically a 5-day down failure. A special form of that swing trade. And I would trade it as a 1-day intraday short. And then if it failed large, and if the market was failing large, I would keep 20% of the gains as a overnight position, but I would make bank on 80%. But it's also possible for this thing to make a mechanical entry here if it takes that out, and then we're looking for a return to the 10-day high. Now, it turns out that Disney does not have a 2-to-1, nor does Home Depot, so I would not trade that one as a swing trade. But if it does break above the high of the day, then I would take that as an intraday move. Similarly, if it opens near the low of today's range and gives me a morning hook, I can play that as a turbo trade. to the top of the stack. And then if it fails, cash it. But if it goes through, I might add a second intraday position. But I'm not going to play that one as a swing trade whatsoever. So Disney, Home Depot, and Walmart are interesting for that reason. So Disney, Home Depot, and Walmart. 5DD and ready to play them as 5DD failures. Because we are in a bearish normal, and if tomorrow the bottom falls out of this thing, those are the first three that I would expect to see suffering. Check or hold. Lots of dojis in the ETFs, only two auto framers. There's Japan and Treasuries at 4-1. The only thing that was any good today was a little bit of strength in energy. So I'm still going to be looking at Devon Energy tomorrow and Chevron. And oil exploration gave back a little bit today, but it's still on the list. Just a handful of the auto framers there. And there's our mechanical framing data. And I like Treasuries, Walmart, Merck, Coke. Some good squeezes there among our primary weapons. Tesla, the S&P, the diamonds. Brazil, not so much. Look at this, though. Microsoft, Chevron, Coke. I would even go to Procter on this one. A larger number of Godzillas back in play. Now, notice that most of these are stealth Godzillas because their 5-day volatility is below 0 on the Z-score, and especially SPG, Simon Property Group, is at -1. I like that one because it has a -0.38 on the 1-day Z-score. These two are really tightly compressed. ALGN and MDT. See if there's any other ones in here that look interesting. BSX. Yeah. And then in our tactical symbol set, we have quite a few Godzillas also. Bitcoin treasuries. There's a lot of crypto in there. For you crypto players, that one is very interesting. That one's interesting to me on treasuries. So if we saw weakness in the market tomorrow in any kind of strength in treasuries, I'm on it. And then Simon Property Group again. That's one that we'll watch for tomorrow very carefully. Quite a few popcorns. And again, we're looking for the volatility has shrunken in those. Come on, dummy. Finicky mouse here. Only MPC has the exaggerated 5-day Z-score better than 1. Otherwise, all of these other ones are microwave popcorn that has not yet started to pop. APA and the FANG, especially compressed. Devon Energy, oh, again, the 5-day Z-score minus 1.5, the 1-day Z-score minus 1.3. That's an even tighter compression than we saw yesterday. So if I go to Devon, ooh, how good is this one? That range compression even tighter today, right near the top of the stack. It didn't follow through strongly to the upside, just kind of monkeyed around. And you saw there was a little bit of weakness early. That was, we actually got the short side trade, for about 1.5 hours on that one this morning. But even tighter compression, that thing's ready to really blow. So that's going to be an amazing one. We've got some fence sitters now in the S&P. These are the ones that are right smack in the middle of their trading range on the 150-day and the 30-day. And these are all quiet or exceptionally quiet, ready to fall off the ledge, but they're not fallen yet. Honeywell, great American company. Let's see what that looks like. Yeah, that's as fence sitting as you could want right there. Right in the middle of its 150-day range, 30-day range, 10-day range, and a compressed 5-day. So that's ready. I'm ready to trade that one on a breakout of the yellow box altogether. The upside one looks the most interesting because you'll start seeing some momentum from these other breakout traders coming in. And it's almost got a Cotta 2 flavor on that. So I like Honeywell. Again, the S&P's most quiet as sorted by the 5-day Z-scores. And then the S&P's most volatile as sorted by the 5-day Z-scores. Notice that there's very few exceptionally volatile, right? There's only a handful above 1.0. So Target is interesting. There's that Regeneron still ready to break out. Campbell Soup. Now, we're going to go take a look at Campbell Soup because I want you to see that it has a 1.03, a normal 5-day volatility, but a double-sized 1-day range. Okay? So let's go, since we're in early days of this one, let's go see what that looks like. Campbell Soup. So what we're doing is we're investigating different kinds of trading ideas to see which patterns resonate with you. Now notice Campbell Soup was up 1.52% today. Where does that stack in terms of overall performance in the S&P? Pretty darn good. There's Campbell Soup. It was in the top 10 of performers. So now take a look at that one, if you will. Here's a nice double bottom. Here is a Cotta 2 breakout. And if that works, this thing goes to the top of the dragon and also to the top of the RL10. So there's about a $3 or $4 move still left in that thing, and it's getting ready to test. This 5-day. Look how big the 5-day high or the 5-day range is compared to the 10-day range. And this is a normal 5-day range, which means the 10-day range was actually compressed. And then this is a double-sized bar. Had a great big move up, big move down, and then closed well. So it is right in the middle of a critical state. So you could even play this one. See how that's like a doji right there? You could even play that one with about a 20-cent risk box. Let's see what that looks like intraday, if you don't mind. Here's let's draw a 20-cent risk box in this thing. So that's about, you could even see, if you could see that one, after it gets done with that that little triangle compression right there. Boy, does that one pay off. So Campbell's soup will be one to watch tomorrow. Check or hold. Do you guys see how we got to that one? This was investigating this anomaly here, that it was among the most volatile, had a large one-day move that just gets our attention. Now notice MO, if you want to just look at it from that side. Holy cow. Look at MO. It's right in the middle of its weekly range, but the daily and the tactical both got smashed, and today's 3.99 says today was a huge collapsing day in Altria. So we're certainly going to take a look at that one. Because momentum or volatility begets more momentum. Oh yeah, down 8%. Note to self, here I am grinding on some of these other ones, and I should have been able to pick up the fact with an alert that that thing was so huge. Oh, why do you want to find the movers? Oh, that's why. Where's my little bar to shrink this? Why can't I see that? Wow. That moved 53, $4, and it's got a 20-cent, holy cow, a 20-cent R10. Wow. I bet you I'll be ready to trade that one if it falls below the 5-day low. I'll bet you I'll be ready to trade MO tomorrow. There's more momentum coming there. Yeah, because that's a... now you'll notice that it's in the middle of its long-term trading range, right? There's that purple box is the 150, but everything else on this thing got murdered. The 30-day box is this one. The 10-day box is this one. The 5-day box was horrible and had a huge range date. That's a 4 times the normal size and closed at the bottom of the range. Boy, there's nothing to hold this thing back. The next support level is probably over here at 47. So that's another $3 to the downside. MO should be on your list. Okay, so enough of that. Thank you to my son for the S&P's most volatile. And then see how quickly you can see what's going on over those different time frames of interest. Location and volatility, and what you want is compounded critical states. That stuff is additive there for you. If you love bottom feeders and Godzillas, that's a Godzilla waiting to happen. ARE. Yeah. Oh, God. Guys, this is money. That report and these techniques are absolute money. Now, the beauty of trading the S&P 500 companies is that if you're not among the top 10 large caps that are in there, you are a very liquid company, but the market itself is not going to harm you as move you around that much. That there are a lot of special reasons why. Whatever caused this thing to be horrible in that time frame, it's getting ready to collapse in a big way. And the bottom's ready to fall out of this thing. I mean, holy smokes. Yeah. So that looks very promising. So +1 to my son for that index report, the sniper report. Here's your. I want to get to the trades, so we'll get this going. Oops. Yeah. There's your R10s for our tactical symbol list. So this is one of the downsides of specializing in some symbols is that I didn't see those other ones habitually. So I got to get my alerts set. But even if I just give the market the first day, I can go circle around that like a shark that smells blood. And meanwhile, just kind of concentrate on my handful of symbols that represents, a broad cross-section of the markets and sectors and companies that trade with volatility enough to make a living on. And then just go scan the herd, the wider herd, like the S&P 500, to find the ones that are bleeding to death or running away to the upside. Lots of spring and summer. Coke and 3M suffering. Notice this: Merck, Pfizer, and Johnson & Johnson in the fall that are starting to weaken. And then here's the standard summary report for our tactical symbols, and then sorted by the 5-day volatility Z-score. That's my default lens. Enough of that. Let's see how the boys did today. Thank you for your patience. Wojcik, this is much better in here. I feel like we should have done better on this leg, but you got paid here. We should have, man, we missed that breakout. We should have gotten all of that, or at least this leg to here, and then re-entered here and gotten that. I feel like we missed this one too. I need you to be studying those these turning points. Like that's your kata 2. You should be crushing that. And here's another. That's a kata 2. You know, this little uptick. You should be triggering on that. And here's another kata 2. We should be killing that move. And then on the downside, that's great. You could even add a second position. When this support level breaks, we could get another one in there. So that's pretty good, but this should have been about 6 today. So I need you to step back a little bit more and look at the broad patterns being shaped by the flow of the dragon. His turning points are significant. Agnieszka just continuing to crush it. Super pinch all over the place. That's your super pinch right there. The breakout. Nice wrist box standard. 2.4. Just like downtown. All right, Tim, let's see what we got going on here. All right, so we've got starting trading here. We're noticing the decline and then a PSAR flip. So this could actually have been long here. I like executing there. But then when that doesn't fail further, and it crosses the VWAP, I feel like we could get long here and earn that instead of waiting. And then this one is a reasonable exit. And so now you could be capturing this move, and that would have made the difference in the day. Made the day positive. Similarly on this one, this short should be taken here on the PSAR flip instead of here. And then if you're short from here and it goes down that far and then starts reversing, anywhere in here you can be taking the exit to at least scratch here. So that's 2 trades we might have gotten a little more on, little more upon, I should say. Good entry, standard risk. This is where I would be drawing the cut line at the PSAR. I think this was late. Like, I think I'd rather see you getting out here or here rather than waiting that long. Although when it did roll over, that's still pretty good. I like this short. Your execution stop is there. Otherwise, that's a collapsing dragon. Here's another collapsing dragon. So actually, you know, there's a couple spots we might have added positions. This is a 1, 2, 3. I almost feel like we could get more out of this. Like if you take half this wrist box, that's about this. That's about how much you give back. So that's still pretty good. But I feel like I still feel, as narrow as the gains were today, I feel like that's when we gave back someone also. Notice this triangle coming to a point here, and then the second leg down happens. So that's pretty good. If we were perfect, we could get this, but that's acceptable. I want to keep more of that too. I think we gave back half the move. This is a good long shot. I like executing at the belly of the dragon, so that's pretty good. I like getting short. Good scratch. I think as soon as this fails again, we could get short here instead of here. But you didn't give back too much and waited for this. And I think we waited too long on that one. So this started failing right away. You had 1, 2, 3 bars down. That's 15 minutes. And in the bottom end of that. So I think we gave back way too much. And today was a grinding day, but there was room in there to get a little bit more. Building up your endurance. That's what we're doing here. Here's Paul. This is the Euro US on 3 minutes. This leg down rejects the dragon and starts failing again. I love that short, and I like getting paid. This is a fake one, go 2 or go 5. Perfect entry, wrist box. When this breaks, we might have considered a second position here. I like getting paid. I'd like to see, and if this didn't fail, it just immediately resumed. Think of that as a little kata 2 and get you right back in near the high. There's no resistance overhead at all, so you can get long right here with a standard wrist box like that, and now you get a slightly better entry than you do here. You can even make that the second position, and then we gave back way too much. So when this peaks, you get 1 down, 2 down. When that doji breaks, you got to get out right there. And you get this instead of that, and you might have gotten this as well. This is a stop and reverse. You got paid. This is good patience. You got paid. There wasn't much there. So 3.1, this might have been 6, but good work. This is the CD only. Yeah, because we're waiting here. Getting short here would have been the kata 2 on the PSAR flip. Uwe exit. Waits for the CD. Good exit. I think I would consider that a CD. And I would even there was not even enough to make that. That's why just that hesitation and fail. So normally if you think it comes all the way back and then fails, you draw that line from here, and then that's your CD. But if that thing only reverses like that and goes down, that's even a stronger signal to go short, because there wasn't any buying pressure that could push it up high enough and then fail. The fact that there was such a little blip, you could smash that, and then you get all of this, and that would probably be +3. And here's another example where that happens. So notice that tiny little blip. It's like the pause at the Bollinger Band mean and then fails. Now there wasn't much to get, but when you start adding this one and this one and this one, there's actually and also this one. There's more we could get. And Luke finishing this up. Did we see this one yesterday? This may have been from yesterday, but we'll look at it again. Oh, new one. Okay. I remember this. You had that making sawdust in the middle of the day. Good scratch, good reentry, pretty good exit, good scratch. A little slow getting in. That's a good exit. A little slow on the rebound. We gave back some. Good scratch. Now we got paid, and again, we let that come out and come all the way back. Maybe here. good short. On this Z3 pinch, or that Z3 violation, we might have gotten a second position here. And then I want to highlight this. When you see it has violated through the Z3, closed in the bottom, opened, and then immediately selling off again, that's where you can get this. Now imagine those were daily bars. You'd be smashing that, and then here, and then here. So there's about 1, 2, 3, 4 signals where the fact that there's no support whatsoever, there's no support anywhere, and the bulls are running, or the bears are running, I suppose. So let's be mindful of that. Pretty good grinding all the way through here. So good workmanlike effort. And the learning point is this. That's the learning point for today. Okay. No, I wouldn't. Yeah, I wouldn't scale that fast. But if you just get one of those on, and at the Z3, you double the score of the day. You might have gotten a third one, but there wasn't much left. Yeah. Remember, if that thing is failing and you get 1, 2, 3, a reversal of 1/3 of your risk box times 3 position equals a full R. So if you get conditioned to give back the full risk box, you gave back 3R. So you have to be mindful of the fact, because you feel enthusiastic because your first position is so deep in the money. That second and third position haven't earned anything yet, so you got to be more skeptical. But this was just a case, for a gunslinger, where this had the combination of a tight wrist box or a Z3 pinch kind of deal. He got into that thing well, and now the bulls are off and running. That's the kind of breakout from trading range, especially the breakdown from trading range, that triggers so much goodness. Now, notice that the downside excursions were large, but it kept fighting its way back up. The tops of that thing are starting to level off already. So that's a really good exit right there. Notice how the bulls were fighting back, still losing a little bit of ground, but compared to the downside excursion, the bulls were really fighting to get back in here, and they locked in those gains all the way through. Yeah, at least half you're right. Yeah, you've seen me do that with if you get short here and here was your risk box, and I take half of that box to say, when do I move to no lose plus dinner for 2? Once that thing starts running down, I get second positions. I'm using those little blue boxes to calibrate the give back, or how much I can tolerate moving against me. And now the failure to fail further is what makes that such a good exit. All right, that's everything for today.